Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do one question of dissolution of partnership firm where journal is required to be prepared without preparation of ledger. Let us go through the question. Pannalal, Babulal, Hiralal were partners sharing profits and losses in proportion of 2:2:1, that is 2/5, 2/5, 1/5. Following is their balance sheet as on 31st March 2008. Let us go through the balance sheet. Asset side, machinery. This will be transferred to realization account, debit side, RD. Stock, realization account, debit side, RD. Debtors, realization account, debit side, RD. RDD, this will be transferred to realization account, credit side. Investment, realization account, debit. Profit and loss account, it is 9,000. It will be divided among all partners in their profit sharing ratio 2:1. 3,600, 3,600, 1,800. This loss will be transferred to the debit of partners' capital account. Bank account, this will be transferred to opening balance of bank account. Let us go through the liabilities. Capital account, Pannalal, Babulal, Hiralal. Partners capital account, credit. General reserve 3,000. This will be distributed among partners in their profit sharing ratio 2:1. 1,200, 1,200, 600. Creditors, this will be transferred to realization account, credit side. Pannalal's loan account. Pannalal is a partner in a firm. He has given a loan 4,000. We'll have to open a separate account where we'll be crediting this amount. Bills payable, realization account, credit. Let us go through the adjustments. On the above date, partner decided to dissolve the firm. Assets were realized. Machinery 22,500. 1. Stock 9,000. 2. Investments 10,500. 3. Debtors 22,500. 4. 4 assets are sold. Amount will be received. Bank account debit. Realization account credit. Dissolution expenses were 1,500. Amount is paid. Bank credit. Realization account debit. Goodwill of the firm realized 12,000. Here in balance sheet asset side we don't have goodwill. So this is unrecorded asset. Unrecorded asset, goodwill is sold. Amount is received. Bank debit. Realization account credit. Past necessary journal entries in the books of the firm. Now here they have not given any information about payment of liabilities. In that case, still we are required to pay creditors, Pannalal's loan, bills payable. Without payment of liabilities, dissolution cannot be completed. So even though there is no information about payment of liabilities, we should assume that liabilities are paid and accordingly entries are required to be recorded. Let us start with the journal entries. We are required to prepare ledger as a working note just to complete 2 journal entries. Otherwise, rest of the entries we can pass without preparation of any ledger. First step of problem is to transfer all items given in balance sheet to various accounts. We call it as a transfer step. Here we'll start with asset side, machinery, stock, debtors at gross value, investments will be transferred to realization account. Realization account debit 74,500, to machinery 25,000, to stock 10,000, to debtors 27,500, to investment 12,000, being sundry assets transferred at book value. Here we have RDD 1,500. This is transferred to the credit of realization account. RDD account debit to realization account 1,500, being RDD transferred. Pannalal's capital account debit 3,600. Babulal's capital account debit 3,600. Hiralal's capital account debit 1,800. To profit and loss account 9,000, being loss distributed. Bank account will be transferred to bank account as an opening balance 2,000. Let us move to liability side. Capital accounts Pannalal, Babulal, Hiralal, it will be transferred to their respective capital account on credit side. General reserve 3,000. This will be distributed in profit sharing ratio, that is 1,200, 1,200, 600. General reserve account debit 3,000, to Pannalal's capital account 1,200, to Babulal's capital account 1,200, to Hiralal's capital account 600, being general reserve distributed. Pannalal's loan and bills payable. These are the 3 liabilities of which creditors and bills payable will be transferred to realization account credit side. Pannalal's loan account will be transferred to separately open account on credit side. Creditors account debit 20,000, bills payable account debit 7,000, to realization account 27,000, being liabilities transferred to realization account at book values. Let us go through the adjustments now. On the above date, the partner decided to dissolve the firm. Assets realized: machinery, stock, investment, debtors. Bank account debit to realization account 22,500, being machinery sold. Bank account debit 9,000 to realization account 9,000 being stock sold. Bank account debit to realization account 10,500 being investment sold. Bank account debit to realization account 22,500 being debtors realized. Realization account debit to cash bank account 1,500 being dissolution expenses paid. Goodwill of the firm realized rupees 12,000. Here on asset side we don't have item goodwill, so this is unrecorded asset which is sold at the time of dissolution. Cash is received, so cash bank account will be debited and realization account will be credited. Cash bank account debit 12,000 to realization account 12,000 being goodwill realized. With this we have completed all adjustments given in the question. Question is silent about these three liabilities: creditors, Pannalal's loan, bills payable. Even though information is not given in the question, we have to assume that those liabilities are paid and accordingly entries should be recorded. Let us start with first creditors. 20,000 will be paid. Realization account debit to cash bank account 20,000 being creditors paid. Realization account debit to cash bank 7,000 being bills payable paid. After payment of creditors and bills payable, now we are required to pay Pannalal's loan account 4,000. Pannalal's loan account debit to cash bank account 4,000, being his loan paid. Up to this, by just reading the question, we have recorded all journal entries. Two more entries are balance, for which we require balancing amount from the ledgers. But entire ledger we cannot prepare because in exam we don't have that much time to prepare ledger also when it is not asked. In that case, ledgers can be prepared as a working note, where we'll be preparing ledger without entering anything in particular column. We'll be just having amount columns so that we can find out the balancing figure. How to do that? Let us understand now. In working note, we have prepared realization account and partners capital account. We'll be entering only amounts in amount column and nothing will be recorded in particular column because we are interested in just finding the balancing figures of these accounts. First entry, realization account debit to various accounts. This is for transfer of assets. This will be posted to the debit of realization account with full value 74,500. RDD to realization account. This will be posted to the credit of realization account 1,500. For distribution of accumulated loss, Pannalal capital account debit, Babulal capital account debit, Hiralal capital account debit to profit and loss account. 3,600, 3,600, 1,800. This will be posted to the debit of partners capital account. General reserve account debit 3,000 to Pannalal's capital account, to Babulal's capital account, to Hiralal's capital account. Amount is distributed 1,200, 1,200, 600. This will be posted to the credit of partners capital account. For dissolution expenses paid, realization account debit to cash bank 1,500. For assets sold, cash bank account debit to realization account 12,000, 20,000, 7,000. These amounts are received. Those will be credited to realization account. Entry number 11, cash bank account debit to realization account 12,000. This is for amount received for goodwill realized. Cash bank account debit to realization account for machinery sold 22,500, 9,000 for stock sold, investment sold 10,500, debtors realized 22,500. These values will be credited to realization account. Creditors and bills payable paid, total amount paid 27,000. Realization account debit for creditors and bills payable paid 27,000. When liabilities are transferred, it will be credited 27,000 over here. Entry for creditors paid, bills payable paid, posted. Pannalal's loan is paid. It will not affect realization account because this liability is not transferred to realization account. It will not affect partners capital account. It is paid at book value 4,000. Now we have closed realization account. Credit is heavy. We got balancing figure 2,000 on debit side, indicating profit on realization. This will be distributed among partners in the profit sharing ratio. Profit is 800, 800, 400 distributed among the partners. This will be recorded to the credit of partners capital account. We have closed partners capital account. We got balancing figure on debit side. This will be transferred to cash bank account. Pannalal 28,400, Babulal 28,400, Hiralal 9,200. Realization account debit 2,000 to Pannalal's capital account 800, to Babulal's capital account 800, to Hiralal's capital account 400. being profit on realization distributed among partners. Pannalal's capital account debit 28,400. Babulal's capital account debit 28,400. Hiralal's capital account debit 9,200. To Cash Bank 66,000, being amount paid to partners in final settlement. Here we have completed all journal entries. In this question, we are required to understand how to give effect to unrecorded asset like goodwill if it is sold at the time of dissolution. Similarly, we have understood how to record all journal entries without preparing total ledger accounts. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.